Good afternoon. Thank you for joining. This is Michelle Savage with XBRL US, and you're here for our webinar, Get Started on the SEC's Pay versus Performance Disclosure Requirements. We're very happy to have with us today three great speakers. We have Jeb Byrne. Jeb is Special Counsel, Division of Corporation Finance at the Securities and Exchange Commission. We also have Lisa Cousineau, Senior Director of XBRL Consulting Services at Broadridge Financial Solutions, and Scott Tice, President and CEO of NovaWorks. For our program today, we're going to be walking through a few different agenda items, and let me explain that to you here. First, we're going to have Scott is going to walk through XBRL fundamentals for those of you who are relatively new to the XBRL world. Then Jeb and Lisa are going to lead us through a review of rule requirements. We're then going to take a couple of CPE questions. We are offering CPE credit today. So if you have signed up for CPE, or frankly, if you haven't signed up, but you're still interested in getting it, please just make sure that you respond to the questions that you see on the screen when we bring up the polls, and then we can get you your certification. The first set of CPE questions will be followed by a discussion between Jeb and Lisa and Scott concerning some of the various rule implementation questions, and then we'll follow up with the final CPE questions. As we go through our program today, if you do have questions, please click on the Q&A link that you see probably about at the top of your screen, and then you can submit your questions through to us, and we'll take them at various points during the program. Also, if you have any problems with technical issues, please email us at support, SUPPORT, at xbrl.us, and we'll do our best to get you back online. So I want to thank our speakers, and I want to thank our audience for coming today. And with that, we're going to move straight into XBRL fundamentals, and I'm going to turn it over to Scott.
Thank you, Michelle. There's probably a fair number of people on the call today that may not be familiar with what XBRL is, probably have heard the acronym before, but we're going to spend just like 10 minutes here talking about it to give you an introduction so you're not like lost in the wilderness when certain terms go flying by. Next, please. So I find it easy to really explain where we kind of came from with this. Early on, everybody who's been involved with the SEC knows kind of the history back to the 33 Act and the 34 Act. Everything was in paper up until the 1990s. In paper, it's obviously very difficult to search. It was manually indexed. Everybody kind of remembers that, at least to a certain extent, the Dewey Decimal System and things like that. Nothing like that today for this type of information. But in the 90s, it was like the solution is really to make some of this electronic. The time had come to do that, and the operational EDGAR system came into play. And first taking text and then later taking HTML. Both were easier to search, but the content was not reliably machine readable. If you think about looking at a table line like cash or cash and equivalents, you can have a lot of different labels there. So it's hard for the machine to figure out which is the right label and then unambiguously figure out what numbers in a table belong to what columns. So clearly a method was needed to identify a flexible method to make sure the data comes in reliably. So next slide, please. So the answer to that was XBRL, or Extensible Business Reporting Language. It's really more than a format. When you think of formats like Excel or comma separated values or CSV, they basically store data, but there's not any intelligence there. XBRL brings meaning to the data as a self-described data model. As part of putting together the taxonomy that will define how the data is put together. XBRL has many levels and options for data validation. It also basically forces you to maintain a particular data type for a value. So if I put in a monetary value, it's going to be validated for that value. If it has to be positive, it'll be validated. In many cases, the data submitted is also used by analysts, educational institutions, and individual investors. So they have a reliable flow of information that they can do quarter to quarter, year to year, or peer analysis. Next slide, please. So what makes XBRL different than other things? Basically, it's self-contained and self-describing. The taxonomy describes the data model, the relationships. There's documentation and authoritative references that can be added. And so because of that and how it works, XBRL is often referred to as structured data, and you'll hear that term occasionally. Next slide, please. So let's look at what does XBRL bring for intelligence. I could take a table here. It doesn't really matter what kind of table. It could also be free-flowing text for that matter. I can identify a piece of data that will become a fact. And that now, instead of just being a number in a column, actually has meaning. It can say, I am customer accounts receivable. My data type is monetary. I have a documentation or a definition. It's referencing a particular codification, or it has a standard label or a terse label, or a role that says I'm a negated value or a total value. It says what entity it belongs to, what period it belongs to, what units. Is it US dollars, yen, Canadian, etc. All that can be put in there. Next, please. So XBRL is used in a lot of places now. The SEC uses it on, I don't know, maybe almost a half dozen or more taxonomies for risk return. This is one of the newest ones that's coming up. Closed-end funds just came into play. Now, the FDIC has been using it for a long time. They started off with basic data-oriented XBRL and then moved to inline XBRL. FERC, or the Federal Energy Regulatory Commission, just implemented last year for their forms. And a lot of NGOs are using it, private industry such as Surety and more. It has a lot of things it can do. And it's also been implemented internationally by many, many countries, both privately and by governments. Next, please. So let's talk about some of the terminology that'll help you along. The taxonomy is the fundamental building block, or it has its fundamental building blocks is the concept, sometimes also known as an element. Now, you'll hear different years on taxonomies. The SEC is generally releasing new taxonomies every year for US GAAP. I'm not sure how that's going to work with pay versus performance in ECT. We'll see how that plays out. Some taxonomies do remain constant or the same for year after year. The taxonomy defines those concepts, the characteristics, and their relationships to other concepts. Each concept will also have properties associated with it, like the data type, period type. In other words, it can only apply to an instance value, such as on a balance sheet, or a duration, like on an income statement. Concepts can also have related documentation, labels, and references. Next, please. So if we kind of look at the hierarchy turned on its side, we'll have the top, sometimes called the entry point, and then we'll have different tables, 1, 2, 3, 4. If you go look at the US GAAP taxonomy, you'll see the face financials, then you'll see disclosures. Each of those will then have line items and axes, abstracts being the headings that would be part of a table that then group each particular concept. And for GAAP, there's a lot. There's like 18,000 plus concepts. I'm not even sure how many standard presentations there are, quite a few. Next, please. Let's take a real quick look at a cover page of an 8K to illustrate this. So for inline XBRL, the data is inside of the HTML, or your standard document that you've been working with for years now. The interactive data is also submitted with that, or the inline XBRL. So on the left, we have what it would look like on a plain browser. But on the right, if we use the inline viewer, we can see things highlighted with the red stripes. That indicates data that has been tagged with inline XBRL. Next slide, please. So let's go ahead and focus in on the securities that are covered in the little table on the bottom there. If I'm in the inline viewer and I click on this, I can roll through various properties. I can see that this is DEI, or Document Entity Information. That's a subtaxonomy the SEC has for identifying companies. I can see that the fact is NASDAQ, what the period is, what type is it, what format is it. There's some documentation here. And then there's additional references for the security exchange name, where it came from, what number, subsections, references, and et cetera. Next, please. So as mentioned before, we talked about concepts. A concept is defined in a taxonomy. Facts are part of the instance submitted to the regulatory agency. Contexts and define periods and other dimensional information. For example, I may say for the 12 months ended 12/31/2022, then I may say for the 12 months 2022, but this is for East Coast or West Coast or any other ways of dimensionalizing things. There's essentially infinite ways of doing that. Next, please. The instance is the collection of information that represents the disclosure of your data. That is what you are submitting, which is a representation of the data that's in the official part of the document, the HTML. It contains context, again, that define a period, and dimensional data, and it has all the facts. Each fact is an intersection of the concept and the context. Next, please. So what gets filed? The instance, which is your HTML document. A little bit of a change as you go to XBRL, it's XHTML, so it has to be well structured. It's a very strict definition of XML with HTML. The schema defines the taxonomy links and other standard taxonomies. In your exhibits, these will all be Exhibit 101. There's standard namings within Edgar, which I'm not going to get into all of them, but for example, schemas.sch. Then you'll have these things called link bases, and the link bases are the additional information, and depending on the taxonomy, these either be optional or you won't need them, or they're going to be required. And again, there's still Exhibit 101 as well. And by the way, there is an Exhibit 104, but I'm sticking with 101 to keep it simple, such as labels that I'm expanding labels on, or presentations. And that then becomes what you file. And you also have to reference those in the exhibit index. Next slide, please. So where can you find more information? Well, first of all, Regulation ST and the Edgar Filer Manual, really, they govern from the ST standpoint and rules what gets disclosed as XBRL and how it gets disclosed, along with a lot of other Edgar things. That, of course, then rides along with SK and SX and everything else, and the rules we're talking about today. There's a preparer's guide. ECD here has a preparer's guide that's pretty concise and will tell you an awful lot about how you should prepare information. You can get data off the SEC website, and there's an XBRL section there. You can go to XBRL US. They can also, I recommend people read the first 3 chapters of the Taxonomy Development Handbook, because it really describes how XBRL works in lay terms. And then we have, of course, FASB. And then you can go to your vendors and ask them questions, or agents, law firms, etc. And I thank you for your time. And I think we're now going to move on to the next section. So,
Scott, thanks very much. We're going to turn it over to Jeb Byrne now, who's going to tell us a little bit about rule requirements.
Thank you very much, Michelle. Before I start, there's a standard disclaimer I have to give. So the Securities and Exchange Commission disclaims responsibility for any private publication or statement of any SEC employee or commissioner. The views I express today are my own and do not necessarily reflect the views of the commission, the commissioners, or my colleagues on the staff of the commission. So I just want to start with a bit of brief background on the pay versus performance rules. So they were adopted as part of the commission's push to finish up the remaining Dodd-Frank Act rulemakings. Section 953A of the Dodd-Frank Act added Section 14I to the Exchange Act, which requires the commission to adopt rules requiring disclosure in annual proxy or information statements of, quote, a clear description of any compensation required to be disclosed under item 402 of Regulation SK, including information that shows the relationship between executive compensation actually paid and the financial performance of the issuer, taking into account any change in the value of the shares of stock and dividends of the issuer and any distributions. I wanted to provide you with a direct quote just to start off with from the statute in case that's helpful in orienting yourself as we go through the different requirements of the new rules. So in April 2015, the Commission proposed amendments to item 402 of Regulation SK to implement the pay versus performance disclosure requirements. And then in January of this year, the Commission reopened the comment period for the 2015 proposed rules and provided the public with the opportunity to comment further on those rules and to address certain additional requirements the Commission was considering in connection with the reopening of the comment period. And then on August 25th of this year, the Commission adopted final rules implementing the requirements of Section 14I. The rules were adopted largely as proposed, but there were a few changes in response to comments and a few additional disclosures that the Commission believes are consistent with the intent of the Dodd-Frank Act requirement. So I want to provide a little bit of framework and requirements on the rules. So the rules created a new item 402V of Regulation XK, which applies to all reporting companies except foreign private issuers, registered investment companies, and emerging growth companies. There are scale disclosure requirements for smaller reporting companies, which you'll probably hear called SRCs as well today. So the pay versus performance disclosure is only required in proxy or information statements that require item 402 executive compensation information, and is not required in all filings that require 402 information. So for example, it's not required in 10Ks or registration statements. In addition, the pay versus performance disclosure is not incorporated by reference into filings under the 33 or 34 Act unless the registrant specifically decides to do so. The pay versus performance rules allow flexibility regarding where a registrant puts the disclosure in the proxy, and the Commission explicitly did not make it part of the CDNA. Now, we're talking a little bit more detail about the disclosure required by the rule. In her portion, Lisa will provide even more granular detail, but I still wanted to provide a little bit of background here. So I'm going to start with the main pay versus performance table, which covers a 5-year period or a 3-year period for smaller reporting companies. This table includes 6 main items. The first is the summary compensation table, total compensation for the registrant's principal executive officer or PEO and non-PEO named executive officers or NEOs. In the pay versus performance table, the NEOs are included as an average, unlike in the summary compensation table where they're included individually. There's a second item is compensation actually paid to the registrant's PEO and NEOs, which is a new figure which is calculated by making certain equity award adjustments and for non-smaller reporting companies, pension benefit adjustments to the summary compensation table total compensation amounts. And again, NEOs are included as an average. The third item is total shareholder return or TSR. The fourth is total shareholder for non-SRCs. The fourth item, the TSR of a peer group of a registrant, doesn't apply to SRCs. And it's either the same peer group which is used for item 201E of regulation SK or a peer group used in the CDNA for purposes of disclosing registrants' compensation benchmarking practices under item 402 B2 Romanet 14 of regulation SK. And the final 2 items are the registrant's net income and for non-SRC registrants, financial performance measure, which is a measure that is not otherwise required to be in the pay versus performance table and is chosen by the registrant and specific to the registrant. This measure is meant to be the most important measure the registrant uses in linking compensation paid to financial performance, and is called the company selected measure, or you sometimes hear it called the CSM. So registrants are required to disclose specified information and footnotes to the table, including the name of each principal executive officer and each non-PEO named executive officer, and amounts deducted or added to calculate executive compensation actually paid. In addition to the main table itself, registrants are required to use the tabular information, provide a clear description of the relationship between certain measures disclosed in the table. That clear description can be a graphical description, a narrative description, or both. The rules provide flexibility on that point. Non-SRC registrants are also required to provide a list, which is called the tabular list, of at least 3 and up to 7 financial performance measures, which the registrant determines to be its most important performance measures. And most important when setting the tabular list uses the same analysis as is used for the company selected measure, which means the company selected measure will be one of the measures included in the tabular list. The tabular list is just a list of measures and does not require quantification or ranking of the measures. And registrants are permitted, but not required, to include non-financial measures in the tabular list if they deem them to be within their 3 to 7 most important measures. Even if they do so, though, they still have to include the required 3 to 7 financial measures, assuming that they have them. As far as tagging and XBRL goes, the rules require registrants to separately tag the values disclosed in the pay versus performance table in inline XBRL, block text tag the footnote and relationship disclosure, and for non-smaller reporting companies, the tabular list disclosure in inline XBRL, and tag specific data points such as quantitative amounts within the footnote disclosures in inline XBRL. The rules went effective on October 11th, 2022, so about 2 weeks ago. And registrants must begin to comply with these disclosure requirements in proxy and information statements that are required to include item 402 executive compensation disclosure for fiscal years ending on or after December 16th, 2022. Registrants other than SRCs will be required to provide the pay versus performance information for 3 years in the first proxy or information statement in which they provide disclosure, adding another year of disclosure in each of the 2 subsequent annual proxy or information statement filings, bringing their full disclosure requirement up to the 5 years I mentioned earlier. Smaller reporting companies are initially required to provide 2 years of pay versus performance disclosure information and then add an additional year in the second year, bringing their full disclosure up to the 3 years I mentioned earlier. In addition, smaller reporting companies will only be required to provide the inline XBRL data beginning in the 3rd filing in which they provide the pay versus performance disclosure instead of the first for non-smaller reporting companies. So as you work through the first year of compliance, please don't hesitate to reach out to my colleagues in the Division of Corporation Finance, Office of Small Business Policy, or in the Division of Corporation Finance, Office of the Chief Accountant with any questions about the pay versus performance rules. And in addition, as you work through the draft taxonomy guide provided on our website, please reach out to my colleagues in the Division of Economic Risk and Analysis's Office of Structured Data with any questions related to the taxonomy. Now I'll pass it on to Lisa, who will provide even more specifics on the pay versus performance rules.
Jeb, thanks very much. It's Michelle Savage here. And just so everyone knows, Jeb has no slides, so just seeing rule requirements up there is what you should be expecting to see. However, I'm going to turn it over to Lisa Cousineau now, and she has some slides addressing some of the same issues and the details that Jeb was walking us through. So thanks very much, Jeb, and now we'll turn it over to Lisa.
Thank you, Michelle. So let me put this in presentation mode. So a lot of many of the things that I'm going to cover, Jeb already addressed, but there'll be some information here on the slide, so it might help you just remember a lot of what Jeb was stating. So as he said, the SEC adopted the rule on August 25th to include incremental disclosures in the annual proxy or information statements that contain required executive compensation disclosures. And as Jeb said, there is a new item 402V that was added to Regulation SK, where registrants are now required to disclose information that reflects the relationship between executive compensation that's actually paid and the financial performance of the registrant tagged in inline XBRL. And as he said, it's effective for fiscal years ended on or after December 16th, 2022. So that will be the 2023 proxy season. So again, who is impacted? It applies to all reporting companies other than foreign private issuers, registered investment companies, and emerging growth companies. And as Jeb also said, smaller reporting companies or SRCs are subject to scaled down reporting requirements. So what is required? So again, we've talked about the tabular disclosure of executive compensation and financial performance measures. This table will have to include total compensation for the principal executive officer or PEO, the average compensation for other named executive officers, another new acronym, NEOs, the total compensation that's actually paid to the principal executive officer and the named executive officers, as well as measures of financial performance. They'll also be included, or you'll also have to include a comparative disclosure in either a graphical form, a narrative form, or a combination of the two, as well as an unranked tabular list of 3 to 7 of the most important financial measures. When is this required? So for large accelerated and accelerated filers, you'll have to, it'll be required for the 5 most recently completed fiscal years. However, in this first proxy, registrants will only need to provide 3 years of data, and then they will add 1 additional year in each of the subsequent 2 annual proxy filings for a total of 5. For the smaller reporting companies, they are subject to a scaled down reporting requirements. And so they will only be required to disclose information for the 3 most recently completed fiscal years. But in this first year of disclosure, they will only have to provide 2 years of data in their first proxy filing, and then add 1 additional year for a total of 3. So the table, this is a graphical representation of the pay versus performance table. You've heard this now many times, but as Jeb said, there are two columns here, the summary compensation that are labeled columns B and D. These are the amounts that are reported in the summary compensation table currently disclosed in your proxy. The total compensation actually paid that will be reported in columns C and E. This reflects the total compensation reported in the table adjusted for pension values and some equity awards that I'll discuss in a few more slides. There are also the total shareholder return, the peer group total shareholder return, a lot of acronyms with this disclosure: TSR, PEO, NEO, net income, and then the company selected measure. So what are these measures of financial performance? So total shareholder return, or TSR, for the registrant. You also have to disclose your total shareholder return for your peer group. And it must be calculated based on a fixed investment of $100 at the measurement point. And this is the same cumulative basis that's used in item 5 of the 10K for that performance graph, your stock performance graph. So you're using that same $100 investment. You'll also disclose and include net income and a company selected measure. And so this is chosen by the registrant. It's specific to the registrant, and it represents the most important financial performance measure used for the most recent fiscal year to link compensation of the named executive officer to company performance. There'll also be some comparative disclosure that talks about the relationships between compensation paid to the principal executive officer and the named executive officers, as well as total shareholder return compared to the peer group. You'll provide a list of 3 to 7 most important financial performance measures, and this list may be presented in 3 different ways. There can be one list for all officers. There could be 2 separate lists, one for the PEO and one for the group of named executive officers. There could be separate lists for the PEO and each named executive officer. As Jeb mentioned earlier, that the filers will be permitted but not required to include non-financial performance measures in the list, such as ESG metrics. So now inline XBRL requirements. So with this first year, apart from the smaller reporting companies, filers will have to detail tag the tabular disclosure. That means all of the numbers, all of the values that are disclosed will have to be individually tagged. There'll have to be detail tagging and text block tagging of that comparative disclosure. And to the extent that there are footnotes to the table, if there are any values that are disclosed in those notes, then each value will need to be individually tagged. And this is required for information that's included in forms the DEF 14A and the DEF 14C, or the information statement. Now, again, the taxonomy that's been created there's a taxonomy, there's already a lot of elements, but to the extent that some of the information that's disclosed in those footnote disclosures is unique to the company, there might not be existing elements in there. And at that point, custom extensions will need to be created to tag that information. And then again, smaller reporting companies will not file in inline XBRL with their first submission. They actually get a 2-year hall pass, and they'll file in that 3rd year where their proxy contains this pay versus performance disclosure. Here's an example of a sample disclosure with inline XBRL. And as Scott showed at the beginning, once the information, or once this disclosure is opened with an inline viewer on the SEC's website, you'll see a lot of the orange underlines, and that means each of these values is individually tagged with all of the attributes that Scott described at the beginning of this webinar. you'll see there are notes, and all of those, the values in the notes will also be, will need to be tagged with, they'll need to be individually tagged so that it's consistent with the rest of the table. These are the comparative disclosures. And so again, it can be in graphical format, it can be in a tabular, in a narrative format, or a combination of both. But in this case, this is an example where each one of those relationships between the compensation actually paid versus total shareholder return versus relative shareholder return versus net income. And then again, the last is the most important performance measures. And again, there's 3 to 7. And in this case, this is an example where there was one for the principal executive officer, and then there was a second list with 4 items for that collective group of named executive officers. So you don't have to include the same number of performance measures for each group. That's as long as there's a minimum of 3 up to 7. So what should registrants do now in preparation for this new disclosure? So I would say that you would want to reach out to a compensation consultant and legal advisors. You're going to want to identify that company selected measure for that new table that will be included in the proxy. You'll need to determine the format of the comparative disclosures. Are you going to use graphs? Are you just only going to use narrative, or will you use both? You'll need to determine those most important performance measures to be included in that unranked tabular list of 3 to 7. And then you will also need to determine the location of this new disclosure in the proxy statement. You'll need to alert the compensation committee chairperson and include them in any discussions you'll have with this compensation consultant and legal advisors. You'll need to gather historical data used to calculate compensation actually paid in 2020, 2021, 2022. You'll need to reach out likely to a pension plan administrator or an actuary for the data needed to calculate the compensation actually paid. You'll need to determine the peer group and decide if the industry peer group or a compensation peer group would be most appropriate for purposes of the comparison. You'll need to draft the pay versus performance table and circulate it for comments. You'll need to determine if any additional supplementary voluntary disclosures are needed, and to see if they might be appropriate to include a complete picture, especially if there's a disconnect between how compensation committee determines compensation and how the corporate performance and compensation is actually paid, and how that information is presented in this new table. So, Michelle, I'm going to turn it back to you for first set of CPE questions.
Great, thanks very much, Lisa. And while we're in the process of converting over to my screen and showing the CPE questions, I'm going to ask a couple questions that have come in for Jeb. Jeb, if a company checks the box SRC and emerging growth company, are they required to include pay versus performance disclosure? Since inline XBRL is not included until the 3rd filing if required.
Yep. So statutorily, under Section 14I of the Exchange Act, emerging growth companies are not required to make the pay versus performance disclosure. So as long as that SRC remains an emerging growth company, they're not required to make the pay versus performance disclosure.
Okay, great, thank you. Another quick question, for a company that is both an accelerated filer and a smaller reporting company, which set of disclosure compliance dates do they follow under this rule? For example, 2 years versus 3 years of information in the first year, tagging versus no tagging.
Yep, so the question you need to ask yourself is whether or not it's a smaller reporting company. The pay versus performance rules aren't pegged on whether the company is an accelerated filer or not. So if the company is a smaller reporting company, then they follow the smaller reporting company disclosure regime. Great,
thank you. Okay, we're going to go straight to poll questions now. I want to make sure that we have plenty of time for the Q&A discussion at the end. So I'm going to go ahead with the first poll question, and you should see this on your screen right now. The new pay versus performance disclosure is required for fiscal periods ending on or after Is it January 1st, 2022, December 16th, 2022, January 1st, 2023, or December 16th, 2023? Please click on the appropriate link and or button rather, and we'll move on to our next question. Yeah, just like another 15 seconds here. All right, we're going to go ahead and close this poll and come up with the next one. Okay, the next poll question. Which of the following is a property of a concept in an XBRL taxonomy? Is it data type, time period, or units? For example, US dollars or euros for a monetary unit. Which of these is a property of a concept? Just another 20 seconds or so here. Another 5 seconds. Okay, we're going to close down this poll. And now we're going to move on to the next portion of our discussion, which is a discussion. So Lisa, I'm going to turn it over to you, and I will manage the slides here.
Okay. So Jeb, can you describe for us or explain what the SEC's goals are with respect to the pay versus performance disclosure?
Sure. So, I mean, the primary goal was to implement the Dodd-Frank Act requirement, and doing so by adopting rules that require registrants to disclose information reflecting the relationship between their executive compensation actually paid and the financial performance of the registrant. A little more, from a policy standpoint, I think, as discussed in the release, the Commission believes the disclosure mandated by the Dodd-Frank Act requirement is intended to provide investors with transparent, comparable, understandable disclosure about the registrant's executive compensation. And the Commission indicated they believe it would help investors better assess a registrant's executive compensation program when making voting decisions, for example, when making advisory votes on executive compensation or when electing directors.
Okay, and what do you see as the impact on companies and investors, and how will the SEC use the data generated through this new rule?
So for the economic impact, there's a very detailed discussion in the economic analysis portion of the final rule. So if that's of interest to you, I'd highly recommend reading that. Generally, the rules require some different computations and a different presentation of certain existing information, rather than the disclosure of new underlying informational content. And so given that, the staff expects the impact on registrants to be relatively low. With respect to investors, and I guess how we expect they might use the pay versus performance rules, it could make it easier and less costly for investors to evaluate how executive compensation relates to registrant performance. And also, given the inline XBRL tagging requirements, it should be easier to compare the data from a large number of filers, cross filers, and also across years.
Well, given the information that needs to be disclosed, how do you think the issuer process will need to change? Well, do you think that there will be other staff from the public company that needs to be involved? Legal, corporate secretary, accounting? What are your thoughts on that?
So I expect there will be minimal changes to issuers' disclosure processes, since although the pay versus performance disclosure is new, the underlying information is for the most part already required. However, every registrant, every company is different. So I don't really have insight into specific processes that will need to change at specific registrants. For example, some registrants are already making pay versus performance disclosures. And that could require minimal or substantive adjustments to align with the requirements of the new Rule 402V. While for other registrants, the pay versus performance rules will be the first time they're making pay versus performance disclosure. So I can't really get into details just because I don't really know what specific adjustments will need to be made on a company by company basis.
Right. So some could feel the pinch more than others.
Exactly.
So if you could go over again, what's required to be XBRL tagged? Are there other sections of the proxy that have to be tagged besides the information in this table? And then we talked about the comparative disclosures and the relative, the measures as well.
Yep. So I think that framing is useful. So the tagging requirement is a tagging requirement for the pay versus performance disclosures. So I think when you're thinking about this, you should think about the item 402B required disclosures and not necessarily proxies in general. So the final rules require registrants to separately tag each value in the table that I think you should see on your screen right now, as well as block text tag the footnote and relationship disclosure. And for non-SRCs, the tabular list of the most important measures, and then tag specific data points, such as quantitative amounts in the footnote disclosures. And all of that tagging should be done in inline XBRL.
Okay, I think we had some slides on that earlier, so hopefully it makes sense to everyone. So is there a requirement to tag the cover pages of schedules of the DEF 14A and the DEF 14C, similar to what happens now with 8K filings?
No, so I think taking it back kind of to the prior question, I think the way to think about this is that it's a item 402V tagging requirement and not a proxy tagging requirement. So there is no cover page tagging requirement for the paper under the pay versus performance rules.
Okay, so is our understanding, or is understanding correct, that the pre-M14A and the DEF M14A proxy statements that don't contain executive compensation disclosures, do they not require XBRL tagging, or is this mandate focused strictly on annual proxy statements that contain the executive compensation disclosures?
Yeah, so again, I think this is kind of the flip side of the coin. It's not targeted at specific proxy statements. The XBRL tagging requirement in 402V and the disclosure requirements more generally in item 402V require information, require that tagging take place or the 402V information be provided in any proxy or information statement that are required to include item 402 of Regulation SK information for fiscal years ending on or after December 16th, 2022.
So the key is the disclosure, that rule versus a particular statement. That's the takeaway from this.
That is exactly right.
Okay. So as far as the rule states that the SEC is not requiring a specific placement for this table, is there any additional guidance that you can provide to issuers about the placement of the table in their proxy?
I can't really provide any additional guidance. No, I think if you read the final release, you'll see that the fact that no specific location was required was an intentional choice by the commission to provide flexibility to registrants. And since the final rules and the commission guidance in the release don't specify a location, I can't really give any guidance or suggestions about location.
Well, it may be that public companies will have to turn to obviously legal counsel or, for advice on where to place this table. So that was one of the items that they're going to have to decide in preparation for this new disclosure. So can registrants file the pay versus performance table within a 10K? And if so, does it need to be tagged?
So I think, as I mentioned earlier, and I think as you mentioned as well, Lisa, the pay versus performance requirement is specific to proxies and information statements that include the item 402 information. So there's no requirement to include them in other filings such as 10Ks. Yeah, a registrant obviously voluntarily can include them in a 10K or another filing, but doing so doesn't change the obligation under item 402V that the pay versus performance information be included in a registrant's proxy or information statement, and that when it's included in that proxy or information statement that it must be tagged.
Okay. So with respect to preparing for a 10K, the US GAAP taxonomy is included in schemas, which is something that Scott covered at the beginning of this presentation. And ECD, that's another taxonomy. So we have the US GAAP taxonomy and we have the executive compensation disclosure, or ECD taxonomy. Does that mean that the filer has to use the US GAAP taxonomy as well?
So for this question and a few other more technical questions, I had my colleagues in Division of Economic Risk and Analysis, Office of Structured Data, help me with these answers. So I'm going to just probably read these off to make sure that I'm being precise.
Okay.
So filers must use the same version year. It may be a different quarterly release within the same year for all taxonomies in each filing. So for ECD 2022, that means filers must use US GAAP 2022.
Okay, so the 2021 is still accepted, but for this ECD taxonomy, because they have to report net income, and net income is a concept within the US GAAP taxonomy, all filers will have to use that 2022 taxonomy. All right, so is it acceptable for a filer to use a different year release for the ECD taxonomy versus the US GAAP? So if they file could they file the 10K with the 2021 US GAAP taxonomy and file their proxy with the 2022 version?
No. So the synchronization of taxonomy versions has been in effect since 2021 and apply to all taxonomies accepted in EDGAR.
All right, thank you for that. Let's see, our next question. So will the SEC be expecting, so Michelle, can you go back one slide? I think we maybe missed one. No. Okay, so so you can advance to the next one. So are there any additional recommendations with respect to the default presentation and guidelines for creating a custom presentation? So I think this again is more technical. So can you speak to that?
Yep, so compliance with all validations and directions in EDGAR filer manual sections 5.2.5 and 6 would lead to that result naturally.
Okay, and then can filers use the default presentations for DEI in the cover page?
Yes.
Okay. All right, so now to the next question. Will the SEC be expecting additional link-based files? And Scott covered this earlier as well. The label or lab, the presentation or pre, and the calculation files for the ECD only content. So clarification will be helpful as to what's mandatory and what's optional.
Yes, so filers are free to locate customer relationships in separate link-based attachments or embed those link bases into a custom schema as they see fit. So lab, pre, def, and cal attachments devoid of any relationships are valid, but unnecessary.
All right, so if we go on to like the when it should be tagged. So when should we expect that the first filings be submitted under this rule? Is it for the first proxy statement after December 16th, which typically would be filing by no later than April for any calendar year filer?
So again, it depends on when the first proxy or information statement is being filed by the registrant that is required to include item 402 of Regulation K disclosure for fiscal years ending on or after December 16th. So that could be earlier than the typical April proxy season, depending on the specifics of that registrant and when they're making the filing and for what reason. But in all of those filings, once that favors performance disclosure requirement arises, tagging will be required, except for smaller reporting companies, I think, as you and I both discussed earlier.
Right. So for calendar year filers, then since their fiscal year end is December 31st, 2022, which is after December 16th, I think that's where we'll all see a lot of new proxies being filed in inline, except for the smaller reporting companies, because they get a 2-year reprieve until they file that third one.
If I could just jump in for one
sure.
second. So just want to be clear for everybody that when you file your 10K, then it needs to be 2022 US GAAP. Is that a correct statement? Because the ECD will be 2022.
So that's a question for Jeb.
Yeah, so again, Scott, more of a technical tagging question. Again, from what I have from my colleagues, for ECD 2022, filers must use US GAAP 2022.
Yeah, that's going to be important that people don't make the mistake of filing that and then coming up a month later and realizing that they used the wrong taxonomy for their 10K.
Good point. All right, so another question. Is it possible that 14C's, the information statement, could be issued prior to 14A's proxy statements? And how should we handle that if the 14C's are filed prior to the 14A?
So again, I think this kind of goes back to the point we discussed earlier. It's not really the form, whether it's an information statement or a proxy statement, that determines whether or not the tagging requirement under the pay versus performance rules apply. So, any Schedule 14C information statements that are required, again, to include that item 402 information for fiscal years ending on or after December 16th, will be required to comply with the final rules, whether or not they're filed before or after the company's proxy statement. And in complying with the final rules, they'll be required to tag the pay versus performance information. Again, with the caveat of other than smaller reporting companies who have that grace period.
Okay. So as far as technical issues that the audience should be aware of, so will the XBRL Previewer, which is for those of you who aren't familiar with it, it's an open source XBRL platform for reviewing XBRL filings. Is it going to be updated for this ECD taxonomy for both inline and the standard or normal XBRL presentation viewing? If so, when?
So if any updates to the Edgar render plugin are required, they are released after publication of the corresponding version of the draft Edgar filer manual. As far as more specifics on timing, I can't give them at this point.
Okay. Do you know, is the SEC planning for any standard error messages for issuers who are test filing their proxy before transmitting it to the SEC?
I'm not sure, but I know if there are any changes in Edgar to produce standard error messages for submissions as they pertain to PVP or pay versus performance, the commission staff will notify the public in the usual manner.
So I think that was all of the questions that we had that we wanted to go over or discuss. And I think in summary, what the audience needs to take away is that there is a new table with some required disclosures, pay versus performance. The key takeaway is don't wait, get started early. The first time's always the hardest, but then next year should be a bit easier. And it will require inline tagging except for the smaller reporting companies. So Michelle, I think you have some CPE questions next.
I do, but we have some additional questions, and I thought we could try to go through some of these quickly if Jeb is comfortable with them. There was another question about cover page tagging and DEIs. And I think just wonder, Jeb, if you could clarify that on tagging. Is tagging required in the cover page and the DEI?
So the only tagging that's required is the specific items that we discussed in the pay versus performance under the pay versus performance rule. So it's the table, I don't have the list right in front of me right now, I apologize, but it's the table, the footnotes to the table, the comparison disclosure, the
unranked list.
The unranked list, exactly. So it's just those items that are under 402V that require tagging.
And I think maybe where this question might be coming is the fact that you have the table, but there's some DEI related information as far as the registrant's name and the CIK that would need to get transmitted along with this new ECD taxonomy. I think that's probably why the questions are coming up. You won't see it on the cover page, but there's still so that when those XBRL files get transmitted, they know which registrant does this relate to and what's the CIK.
Got it. Thank you for that clarification.
Yeah, those are mostly standard items that have been filed before cover page tagging anyway.
Yeah, so if that's the case, I would look at the taxonomy. I would assume that that's probably addressed in there, and if not, that's I think probably something
in 6, 5, 20, and 21 of the Edgar Filer Manual. That may change with later revisions, but if you look at it, it only covers things like the CIK and the registrant's name.
Okay.
Okay, a couple more questions. Maybe we'll just take like 2 more. And for the rest of the questions, we'll try to collect them, and Jill, I'll probably come back to you on these. So question that we've received from a couple of people: will the proxy need an exhibit index that lists the interactive data files? I don't know if you're able to respond to that question.
I don't know enough about the technical in my next XBRL requirements. Apologies.
Okay, so we'll come back to the individuals that asked that question and get an answer later on. And then another question, does this also apply when using the closed-end fund and ECD taxonomy? So we didn't get the full question on that, so I think we'll have to pass on that.
There's one I clicked by accident as answer live, and that is, what's the taxonomy for pay versus performance? It's ECD.
Right. And then another question, does the TCR have to be a 1-year TCR, or can it be longer, especially since some performance compensation earned in a year is a result of multiple years?
Yeah, so the calculation of the TSR is laid out in the final rule, and I would just reread that and focus on the requirements of that. It is a specific calculation that's required. It's not meant to be variable. It's meant to be comparable across companies.
Great. Okay, thank you. Thank you all very much. I'm going to go to CPE questions because I want to make sure everybody has a chance to do these. All right, let me bring up the polls here. Okay, so this question, how many years of data need to be included in the new tabular disclosure? Is it 3 years for smaller reporting companies, 5 years for large accelerated and accelerated filers, 3 years for all other filers, including foreign private issuers, or is it 3 years for small reporting companies and 3 years for all other filers, including foreign private issuers? So just make sure you click on the right button. And we have about another 30 seconds on this. Okay, like another 10 seconds. Okay, I'm going to close down the poll, and hopefully we got everybody who needed to respond to that. All right, we're going to go to our last question. Inline XBRL tagging is required for all pay versus performance disclosures. Is that true, false, or is it true for large accelerated filers and false for smaller reporting companies? Is it true for large accelerated and accelerated filers, but delayed for smaller reporting companies? Which of those answers is correct? Okay, just another 15 seconds for that question. Just while we're waiting for that, one question came in: when will the ECD taxonomy be final and available for use? Right now, it is out for public review until November 28th. So Jeb, I don't know if you have any sense of timing for when that taxonomy might be finalized and available.
I do not. I don't know if maybe Scott, having done this, probably gone through the process a few times, has insight into how long it usually takes. But I know the plan is to have it available as soon as possible after that November date.
Don't know. It varies.
Right. Yeah, if anybody here is a member of XBRL US, you're welcome to join us in weighing in on that taxonomy. We're planning on submitting a comment letter, so just let me know. Okay, well, I think that's all we have time for. We're going slightly over here, and I'm going to end that poll. I want to thank our speakers for doing a phenomenal job on the program today, and also thank you to our audience for joining. I also want to let you know about some upcoming webinars. We have one next week that is brought to you by the Financial Accounting Standards Board. They are putting out an invitation to comment on meta model and proposed policy election element relationships. So that's going to be on November 2nd. So that's a somewhat more technical session. And then we also have a session coming up on November 15th, which is on variable annuity and life insurance companies managing new disclosure requirements. So this is another first. It's the first time that variable annuities and life insurance companies will be submitting data in structured format, just like the proxy statements, first time proxy. So thank you very much. And we hope to see you at some of our upcoming webinars.